Welcome back to the channel, everybody. My name's Artie with CoinCasso, and in this video, we go over the top news articles written in the last 24 hours so that you guys can stay up to date, knowledgeable, informed, just like absorbed in the entire cryptocurrency space. Not many big headlines in the news today, so let's jump into this first article, which is titled, BitMEX is making Bitcoin network more expensive for everyone, research finds. Every day around mid-morning New York time, the average fee Bitcoin user worldwide pay to send the cryptocurrency spikes for up to an hour, then returns to normal. A respected researcher thinks he's found the reason. BitMEX. If the crypto derivatives exchange uses more efficient technologies when broadcasting transactions, users could save as much as roughly 1.7 Bitcoins, worth more than $15,000 at press time, in fees every single day, or about 7% of total daily fees paid. Nearly every time a user sends a Bitcoin transaction, they tack on a usually small fee along with it. Fees fluctuate all the time depending on how much congestion in the network there is. That's because there's limited space for transactions to go through, and if there are too many transactions sent at the same time, miners will prioritize ushering those who have higher fees, and those who have smaller fees have to wait. Because BitMEX broadcasts thousands of transactions at once at the same time every single day, it leads to a fee increase every single day. Most Bitcoin wallets have fee estimators built in that estimate what fee a user should add to a transaction to ensure it is accepted in a timely fashion. If the network is handling too many transactions at once, the fee is too small and it could take longer for the transaction to go through. And basically what this article is saying is that because BitMEX has so much volume and they process so many transactions at the same time, it would be better if BitMEX just kind of spread that over the day. That way the prices would be reasonable all day, 24 hours a day. But understandably, because the market is opening up at that exact same time, a lot of people want to get in right when the market's opening because they think that Bitcoin doesn't run 24 hours a day, because people need to learn and watch my YouTube channel because we have a bunch of educational videos on this topic. And onto our next article of the day, which is titled, As Tether Supply Hits Record High, It Moves Away from Original Home. Tether growth is hitting an all-time high across multiple blockchains, but the first protocol to support Tether is being left behind. OmniLayer, built on Bitcoin, has suffered negative growth in Tether transactions over the last 12 consecutive months. Tether supply on OmniLayer has also fallen more than 50% over the same period. OmniLayer Tether supply peaked in mid-2018 at just over 3 billion. Tether tokens first launched on the OmniLayer in October 2014. While fluctuations in stablecoin supply and transaction counts happen regularly, it's usually for there to be a contraction in supply for months at a time, especially for Tether. Performance concerns across Tether-supported protocols seem to be driving demand on platforms like Ethereum and away from OmniLayer. Transaction fees and confirmation times were the primary reason Tether decided to evolve its stablecoin into a cross-chain asset supported by multiple protocols. Tether recently said on Twitter, "At Tether, we truly care for Omni, since it was the first protocol that made Tether possible. And it also relies on Bitcoin security, but we had to give traders what they were asking for." Smart move by Tether to actually go with things that are working, things that are more cost effective, and things that are faster. If you don't know about stablecoins, definitely go watch our video where we talk about USDT, in particular Tether. And onto our last article of the day, which is titled, Bitcoin Volatility Higher Than the S&P 500 Again, but still lower than oil. Now, if you remember last week, we talked about the fact that Bitcoin went up so much that they're actually less volatile than the S&P 500 since the March 12th crash. In an ever curiouser market of 2020, Bitcoin is only slightly more volatile than the S&P 500 and nowhere close to the bumpy ride oil has been on. In early trading, the world's oldest cryptocurrency was at 8,800 territory before jumping as high as 9,125 on spot exchanges. After that quick run-up, Bitcoin quickly sold off back to 8,800 levels at about 11 o'clock. With 10-day and 50-day technical indicators moving averages signaling tepid sentiment Tuesday, Bitcoin is experiencing little trading action, staying at around the 8,800 price range. The sideways action, also known as consolidation, is a pattern of predictable behavior during which traders seek various price levels in which to trade in and out. Despite the cryptocurrency's reputation as risky and volatile, in these unprecedented and often unpredictable times, oil is actually much more volatile than either the S&P 500 or Bitcoin, and by a large margin. Bad news for Bitcoin day traders, but really good news for those who hold Bitcoin for the long term. The less volatile Bitcoin is, the nice and steady climb we will have up to the $1 million mark. And that's it for the news, guys. I hope you guys enjoyed this episode. I hope you got some value out of it. Please don't forget to like the Facebook page, subscribe to the YouTube channel, and join us later today when we release our video on tokens, a knowledge-based video on tokens. So if you're ever curious about tokens and you want to learn more about it, the video that we're releasing later today is going to teach you all about tokens, all 3 different types, as well as ERC20 tokens. Thanks for watching, and we'll see you later today.